Hello, this is George with the Loan Savers Direct out of the city of Rancho, Cucamonga. I'm doing this video as a little education because I get clients asking me, do we have to pay mortgage insurance or PMI? And the answer to that, and this video is to answer all my clients as well as all the ones that they are curious, what is PMI and why do you have to pay? And yes, you do have to pay only if you based on your situation. So it depends on the loan program that you're getting, and depends what loan program do you fit in, and it depends on your down payment as well, and it depends on these kind of factors that would let you know if you have to have PMI or mortgage insurance or not. I'm going to give you a little example about the different programs that we have in here in regard to PMI. With FHA, you always have to pay PMI. Put it that way. You take a FHA, you're going to pay PMI. With FHA, there is two kind of PMI. You get upfront PMI, which is 1.75% of the loan amount, and then you get the monthly PMI. The monthly PMI is 0.85% if the equity is less than 10%. So if you put less than 10% down payment, then your PMI rate is 0.85% of the loan amount per year. And then if your down payment is 10% and more, then your PMI is 0.8%. And this is and this monthly PMI you will pay it for 11 years. If you keep your FHA loan for 11 years, after 11 years it will drop on its own. Now in conventional, it all depends on the down payment that you put. If you put more than 20% down payment, 20% and above, then you don't have a mortgage insurance. And with conventional, there is no upfront mortgage insurance. But if you put less than 20%, then mortgage insurance kicks in. Now the mortgage insurance less than in conventional, it's not well defined like FHA, because it depends on how much down payment you put. So the more down payment, the smaller the mortgage insurance. The less down payment, the larger. And it could go from 0.45% of the loan amount all the way to 1.25% of the loan amount as a mortgage insurance. This is what to expect, but also you can buy it out. You can say to the bank, the bank has programs. They do have programs where the interest rate and the mortgage insurance is blended together, so you don't have it separately, and now you have one rate and you don't have mortgage insurance, but you pay a higher rate for that. That's another option. It happens only with conventional. FHA, you don't have that option. And then with VA, you don't have a PMI, but with VA you do have upfront funding fee. I mean, there is a 2.25% that is paid up front, and it is financed by VA. And not all VA people pay for it. If they are disabled, or there is certain things that will exempt them from paying that, or it could be lesser as well. Depends on the loan to value. So this is an idea of the different loan programs with the PMI and the mortgage insurance. I hope this is clear and understood, to give you an idea when a loan officer tells you you have a PMI, how to go about it. I'm happy to provide this information. If you have any question regarding mortgage insurance, PMI, or anything else, please give me a call. Have a good day.